This is Manny Gathers of Best Money Strategies. Let's talk about a note, real estate note transaction where it ends up in being a loan modification. And what that means is typically a homeowner hadn't paid the mortgage for a certain amount of time, and the lender goes in and modify the loan and reduce payments or reduce principal balance or whatever. So that's what a loan modification, and that's designed to keep the homeowner in the home. That's the typically the first goal that you want to achieve. In this particular deal, this note, the homeowner had a balance of about 54,000 and 4 years of missed payments. The value of the property was 35,000 or FMV, fair market value. So they had 4 years of missed payments. They were upside down in the mortgage. We would go in and buy this note from the lender at a discount because it's a problem for them. So we would take the problem off their hands, and because of that, they give it, they gave it to us for a discount. In this case, $11,000. So we would buy this note for 11,000, and the 11,000 would be someone like yourself, a private investor. You could take your um, money, put into a self-directed IRA, Roth IRA, and you could invest 11,000 in this deal. Best Money Strategies would buy the note, secure the deal. We would do all the work out, which means we would hire a legal company to now communicate on our behalf with the owner to make sure we don't break any laws, consumer protection laws. And they would say, hey, you have a new lender, Best Money Strategies, and they're very eager to help you with your issue with paying this, your mortgage now. And part of that deal would be the homeowner needs to bring some money to the table as a down payment to show that they're sincere. In this case, they brought 5,000 to the table, and we agreed that if you brought the 5,000 and paid your mortgage on time for the next 6 months in a row, we would then start the modification, and we wouldn't go after the 4 years of missed payments all at once. We would just start your loan like it was the first day. So the balance is still there. We're just starting forgiving all the penalties that came with 4 years of missed payments. So obviously that saves a family from financial ruin. So they're happy and they get to stay in their home. And they've been in this house for 18 years. So obviously they wanted to stay in the home. Um, and then we were able to get 5,000 of money up front plus 6 months of payments at 523.44. So obviously we've gotten over half of the money invested of the 11,000 back within 6 months. And then at 6 months, what's unique is we would then introduce this homeowner to a FHA 1023 refi loan. And the FHA would say, yes, they're qualified if the lender, Best Money Strategies, is modifying your loan, which we were, and then we would reduce the principal. So instead of saying give us all 54,000, they would give us 97.5% of fair market value or 34,000. We would take that as a payoff, forgive the rest 20,000, and then now we would in turn take that profit of 34,000, and you as an investor would get you 11,000 plus interest. So if we agreed upon 12% or 25%, you would get 11,000 plus 25%. And now you're happy because you got your money plus a double digit return with that very little risk. They're happy because they got to keep their property, stay in their home. And Best Money Strategies is happy because we were able to work this deal out and able to split that ROI between with us and the investor. So that's how a typical mod works on a note deal. So give us a call, 410-855-5373. And there's our email, manny@bestmoneystrategies.com. And there's the website, bestmoneystrategy.com.